Hello traders, how are you? I hope you're all doing very well today. Once again, I am here with a new trading strategy for binary options, this time using these two indicators. Honestly, it's really great, so without further ado, let's get started. First, we're going to set up the indicators. Okay, so let's start with these right here. I'm not sure if you're familiar with them. They're called Bollinger Bands. You need to go to indicators, then go to popular, and in popular you'll find them here, Bollinger Bands. We go in and leave them as they are, just as they are. I didn't change the color or anything else. And then we have the RSI, which is the one down here. You can also find the RSI here. It's right here, relative strength index. We leave it as it is. I did change the colors a bit, but overall it's the same. You can set the colors however you like. So after setting up the indicators, the only thing we have to do is wait for a pattern. And what does this pattern consist of? Well, it's very simple. It consists of waiting for our candle to reach this point up to the middle, and when this red candle here finishes, a candle of similar size or approximately the same size as this one appears here on the right. When we see that this candle ends up being almost the same size as the previous red one, obviously it should be green, we take an upward trade. Now I'm going to look for some examples so we can see them. Very well traders, here we have the perfect example, Look, there was a succession of little candles here, up, down, until it reaches the middle. It doesn't matter if the little candle goes a bit past, is a bit off to the side, or lands exactly here. There's no problem if this candle is a little above or a little below. As long as it ends up in the center specifically, that's enough. Then what we have to wait for is for this candle to break out and end up practically the same size as this candle, okay? If it goes a little over in size, that's fine. As long as the size difference isn't too big, we don't have any problem. Or even if it ends up smaller, maybe it finished around here, let's say the candle ended here, that's not a problem, we can still take it. Or if it ends up a little lower as well, that's not a problem either, okay? What we definitely shouldn't do is take trades when there's a difference in size that's just way too big, okay? For example, like in this particular case right here, where we actually have a very large size difference between the two sides. If this candle had ended up the same as this one, just a little bit bigger, that's fine, but this one is almost half again as big as the previous one, so here we would have lost. Another thing we should also avoid and not take is when our candle crosses this and touches here. For example, this right here can't be taken. Why? Because even though it's not touching, it's already very close to the Bollinger Band. We need to make sure that our candle stays in the middle or that there is some space above, okay? Like in this case right here, okay? There's a gap there. Another thing I notice here is that the candle that appeared, the red one, already touched the upper part, so we couldn't take it, okay? Here it worked out very well, but we don't know if that could happen next time, so we need to avoid those kinds of changes. Now let's look for a bullish opportunity so you can also see what a bullish scenario looks like. Alright traders, here we have another example in a bullish context, okay? Look, here's a perfect example. This candle closed here and the next candle closed here. It didn't end up being the full size, but there is a size difference, though not a very big one, right? In other words, the size of this candle is quite similar to this one. It's just a little short of matching, but it's enough. Also, the trend is completely bullish, as we can see here, and we can also rely on the RSI. The only thing the RSI is useful for is to spot some kind of breakout. We can see here that every time this pattern repeats, we notice that at that moment this happens. There's a drop and then a kind of rise. We enter at this point here, at the breakout point, after having detected the pattern. Actually, the RSI is just a little extra we have, but the strategy itself is really based on the pattern and the Bollinger Bands. Okay, so then just to emphasize one last time, we have to wait for our candle to close here, a red candle. Then the green candle appears and ends up engulfing this one, either being the same size or with only a small difference in size, so that we can enter 1 minute trades here. Okay, we would enter a buy position in this context. Alright, now let's move on to the trades I recorded so you can understand this in a more realistic scenario. Alright traders, here we have the first trade. As we can see, it's a downtrend. Our green candle ended up right at the middle Bollinger Band. The RCI is at the breaking point, and the red candle that followed closed at a size similar to the previous green candle. So as a result, I take a sell position. Sometimes these trades, while they're in progress, can seem quite misleading. It might really look like you're going to lose, but in the end, you actually end up winning, because this is an extremely effective and reliable pattern. I would say that out of 10 trades, you might lose one and win the rest quite well if you know how to apply it. As you can see there, most of the time it looked like a loss, but in the end it was a win. We wait 3, 2, 1 and it's over. First trade won. Now we have the second trade here. The context is similar but in reverse. We have our green candle which ended at the Bollinger Bands. Then a red candle appeared and ended up about the same size. So I take a sell position. Okay, so now we just have to wait. We have it set up right there. As I was saying, sometimes these trades can be a bit tricky because most of the time it looks like they're gonna lose, like they keep reversing a lot. If you saw the green candle that appeared, it was about the same size as the previous candle. Almost not. A beginner would have lost hope of winning in the first few seconds, but as I always tell you, we have to wait until the end. We can't give up until the trade is over. As always, it ends up being a win, so we don't have any problem. Let's move on to the last trade. Bullish context, we have a candle that closes on the Bollinger Band. This time it closed a little below, but that's not a problem. The green candle that appeared afterward is similar in size to the previous red candle, and so when that candle closed, I took an upward trade. Once again, that pattern repeats itself a bit. It's kind of funny and annoying at the same time, where the candle starts off almost as a loss, or it looks like it's going to lose right up until the end, and then in the last few seconds it ends up winning. Because as I said, the pattern is extremely effective. It's just a bit of a prankster, I would say, in this trading context. There are only a few seconds left before the video ends. Okay traders, another winning trade as always.